let's talk about the benefits of cash out refinancing for military families. So, taking cash out of your home for the military families. Technically, a lot of these benefits are probably going to be overlapping in the sense that they're these taking cash out. But again, for military families, there are a lot of nuances, advantages, and disadvantages. And I think that's the part we want to focus on. So, overall, let's just talk about what a cash out is, just real quick, high level. If you got equity in your home's going to be worth 500 grand and you owe 300 grand on a mortgage. In that scenario, there's $200,000 of equity in that home. So, what are the benefits of cash out refinancing for the military families in that scenario? So, those are going to be the numbers we use, just picking them out of the air. What's the benefit of doing that? So, for cash out refinances in Texas, where I am, we are unlike any other state in the union to where it's like it doesn't matter what the rules say. Like you're going to be for cash out, for taking actual physical cash and put it in your pocket that is yours from equity. Texas law won't let you go above 80%. That's called a Texas A6. So we'll put a link somewhere in here so you can look more about that. And that's not going to be something that is allowed for military families. So really, this is more talking about cash outs for everybody not in Texas that's looking for the military families and doing this in like a VA loan. So, because if somebody in my example, you can look to do the refinance in a VA loan, it's where you take some of that cash out, or you can do quote normal financing, which is going to be like the conventional financing. And there's pros and cons to both. And that's what we're here to talk about. So, first and foremost, what are the benefits of cash out refinancing for the military families? A lot of it's going to be overlapping, like I mentioned. It's cool. You can put cash in your pocket, right, to maybe pay off some consumer debts or maybe high interest credit card loans, student loans, car loans, medical bills, things like that. So, cash in the pocket, certainly one. Maybe use that money to do home improvement projects. There are home improvement loans, by the way. So in addition to these, you should maybe check that out if you're doing home improvements. Make sure you compare the two, the cash out versus improvements. Maybe it's for paying for one-off expenses. Let's call them whether it's seasonal uses or just the one big time stuff. Like maybe there's like property taxes can come due and you caught off guard if you're self-employed or somebody in the house is self-employed and you owe some taxes you weren't accounting on. Could be school tuition. I know it's a big thing in my household when that comes around. It could be putting in a pool that kind of goes under the home improvement world. Um, Maybe it's a wedding, sending the kid to college. Um, Investment opportunity. Although technically, I don't think mortgage individuals and professionals are allowed to say like, use this cash and go invest it somewhere else. I know it happens, but we're not here to convince you that you should. And then ultimately, one of the extra side benefits may be, if somebody's got a really high interest rate on their mortgage and they do this cash out piece, maybe they actually lower their interest rate in the meantime. That's always fun. That's a cool little benefit. So for military families, some of the things to consider that are going to be different, like I mentioned, is whether or not you want to use your VA or not on this. So whether or not you have a VA on the current home, the home loan, whether it's there or not, doesn't matter. But if you look at this cash out piece on the VA piece, again, outside of Texas, you got to think about what is that going to do for you in terms of tying up your eligibility, maybe your service eligibility, maybe something's changed or you're about to retire or you want to go move somewhere else or you're about to, you know, just buy another home. So again, I think those are considerations you got to have to say, do you want to tie up your VA and get that entitlement put into this property again? Because this is an opportunity. If you're doing the cash out and you got all that equity, is there a real benefit to doing the VA? Because if your interest rate doing a conventional financing, if your interest rate and closing costs and all that are going to be comparable, you might say, man, I'm just going to take the VA off of this home, right? So that you do have it for future use in case you do need it. So I think that's the big piece that you got to have a consideration for when doing a, cash out refinancing for a military family. The other part is just the cost, right? In addition to that rate, if there's a funding fee, like, somebody, a veteran with disability, with enough disability may get an exemption and a waiver. But from a cost standpoint, doing a VA cash out, you may have that funding fee that's going to end up being more closing costs. Maybe you don't want that. So maybe if the rates are comparable or even a touch higher, I think that's something else to consider. The other piece is how much money to take, right? So if you're going to be, doing some big event again, like we talked about a couple of them, the wedding or retirement or whatever, you got to figure out how much of that do you really need to want. And again, That's kind of a common one where anybody taking that cash out, you got to just figure what it is so you don't go back and have to redo it again. Because once you do a VA loan, there's going to be restrictions, and 210 days got to pass before you can do another one. So, and no, but I don't want you. I mean, whoever you are, it's like I don't want somebody doing two loans, one loan and then do another one 7 months later, unless rates have just dropped and you can save a ton of money. But I don't want you to do it just because you forgot to get more money. So I think those are big pieces, right? If you can hopefully maybe capitalize on some lower interest rates, always a plus. Maybe again, the timing of this could be if you feel like credit scores could be improving or something's going to happen here in the near future that makes your financial situation better to get a better rate. So maybe the timing of this has to do with it. Maybe it's some of the debt that could be out there that you owe, like maybe you owe something that's coming due. Again, putting all this together, it's just a big puzzle, and everybody's going to be different. And there's no like universal, like, hey, you have to do this. I think the biggest question I would say, or the biggest piece to consider is, do you do the VA or do you do conventional financing? And then if you did this, how does that change your cash flow? Could because maybe you don't pay off all the debts, maybe you pay off the big hard ones, and then the cash flow gated from this. Maybe that's the part you use to pay off some of the other debts, so you have to pull quite so much out. Um, yeah, really, truly, I think those are the big considerations. There's sort of tax benefits for cost and how you structure that about paying points or not paying points. So I think that's one part. What do you need to do to the house? If you do plan on selling in the near, do you do the upgrades now and pay for them and enjoy them while they're there, whether they're energy efficient upgrades or just cosmetic or whatever it may be. Really, truly, I think that's kind of the highlights, right? So whether you want to do this for cash in the pocket, home improvements, paying off debts, debt consolidation, certainly. I think all that's really important. And if you have any questions and you're not sure, because look, there's no one size fits all, certainly. So if you have questions, the Mortgage Mark team is here to help. Happy to go through your scenario, what you're doing, what you're thinking, what the options are, compare. We're happy to do all that because, again, it's not one size fits all. So please reach out to the Mortgage Mark team if you have any questions. We're certainly happy to help. Look forward to hearing from you. And as always, when you think mortgage, think Mark.